Today's episode is about how to set up a self-directed IRA and why everybody needs one. Setting up an IRA is the easy part, but you need a little education first. So today we're going to talk about the benefits of an IRA, the difference between a traditional IRA and a Roth IRA, and how different companies will charge you for their services. Before we get started, I need to disclaim, I'm not a licensed real estate attorney. I'm not a licensed financial advisor. However, I have been talking to these people for all my life, and I do practice these things I'm talking about for better or for worse. So it's always up to you to hire a licensed attorney or financial advisor to advise you on what's right for you. This is just simply my opinion and what I've been doing all these years. So what are some of the benefits of owning an IRA? Well, number one, you can self-direct this retirement plan, which means you get to choose what you invest in, and you can stop leaving all the financial decisions to all the yahoos out there who probably don't even know your name. So, learn how to self-direct. To do that, you need a little education, but there are things you can invest in, and there are a few prohibitive things. So, prohibitive things would be like antiques, collectibles. There's a list, but they're not too hard to stay away from. And if you really, really want to trade in them, there's even a way to do it, but I'll explain that later. The number two reason to have an IRA is because you're going to defer your taxes. Now, when you're deferring your taxes, there's like a rule that we laugh about. The general rule of taxation and paying taxes is defer, 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 die. Good job. We're going to defer taxes for as long as we can, as often as we can, as much as we can. There are different tax ramifications for a traditional IRA versus a Roth IRA, and we're going to talk about that. In a traditional IRA, you earn some money, then you take some of the money you earned, your gross income, and you take like $2,000 of it, and you put it into the IRA, and it comes off of your income. So you're actually taking this $2,000 tax-free and putting it into your retirement fund. Because you didn't pay tax on this $2,000 when you put it into the fund, you'll have to pay tax on the money whenever you take it out. So if this $2,000 grows to $10,000, you'll have to pay tax on that $10,000 as you take it out because you didn't pay tax on it when you put it in. A Roth IRA is exactly opposite. You make your money, you pay taxes on all the money that you make, and then you take what's left over. Out of that, you take $2,000, which you've already paid tax on, and you open your retirement account with this money that, again, you've already paid tax on. Now, if this $2,000 grows to $10,000, you never have to pay tax on it when you take it out. Why? Because you paid the tax on it in the beginning. It's a really interesting concept, and I love Roth IRAs, especially when you're just starting out. If you have to choose between one or the other and you're just starting, I would always pick the Roth because you pay today's tax on the money that you're going to invest, and then it can grow for 10, 15, 20, 30 years. Heaven only knows what that tax bracket will be by then. And when you take it out, you owe no taxes. So if you take $2,000 and you grow it to $2 million over 25 years because you got lucky, you can take the whole $2 million out in one day and never pay tax because you paid tax on $2,000 before you put it in. Now, some people would say, why in the world would you ever need a traditional IRA then? Well, as you start making more and more money, you'll need to get some tax write-offs. And in a traditional IRA, you can put in money and get a tax break. You'll also maybe want to discuss 401ks, but that's another option for a later date. Before I move on to our last point, I want you to please, if you like what we've been talking about and if this is helpful, hit that like button and please share it with your friends. And of course, if you haven't subscribed, then what are you waiting for? Hit that subscribe button. There's a lot more content. Also stick around because after this next little chapter, we're going to give away a tax-free future ebook, and I'm going to show you how to get your hands on it. You know, there's a company out there, taxfreefuture.com, that is a major sponsor of ours. And I always like to use tax-free taxfreefuture.com because it's directly related to this topic that we're going to cover here. Different companies that will set up your IRAs and 401ks and health saving plans, they have different ways of charging. Now, I personally had 4 of these different accounts between my wife and I. And I looked up one day and I was getting billed $3,000 for this one and $2,500 for this one. They were annual fees. And when I looked at all the fees I'd paid over that year, I had paid $12,000 to maintain 4 retirement funds. Now, granted, my retirement funds have more than a modest amount in them, so it's not so overwhelming, but it was a lot of money still, $12,000 for 4 accounts. So I started to check around and say, I don't like paying this $12,000 for these 4 accounts. Do I have any other choices? Well, there is another choice, taxfreefuture.com. I rolled everything over to them, and they charge $175 annual fee total. Now the trick is, they have an upfront fee of $1,500. So you can choose between $1,500 upfront and $175 flat fee for the lifetime of your retirement plan. Or you can choose 0 money up front and then get the living you-know-what billed out of you for the rest of your life. So obviously, I chose the other. I believe in tax-free future. That's the main difference in companies. Companies that are free to get into charge you to stay. They charge you a lot every year in their annual fees to stay. There's transfer fees, transaction fees, account balance fees, you name it. Some of these fees just seem like they're even just made up. And you got into this account for 0, but they're going to make their money and it'll be made for the rest of the life of that retirement plan, which could be decades. I chose to pay $1,500 up front for each one of my accounts, and then there's a $175 annual fee for the rest of this retirement plan's life. And I figured that was going to be way, way, way cheaper in the long run. And that's why I recommend taxfreefuture.com. While we're on the topic of IRAs, I want to give you an ebook from Tax Free Future. It's an ebook that explains to you the ins and outs and helps you to make a decision on what's best for you and what's best for your retirement. Go to taxfreefuture.com and download their ebook. Also, while you're there, they'll ask you for a little bit of micro information, and please give it to them because they're not going to beat you up with a bunch of emails and stuff every day, but they need that micro information, and they're going to give you 37 video vignettes, 3 and 4 and 5 minute little video vignettes that explain in depth from the attorney behind this company how all this works and how you can benefit from it. My favorite parts are where you can take little bits of money and we explain how you turn little bits of money into big amounts of money in very short periods of time. Because that's usually where people fall down. I put in $2,000, but what the heck can I do with $2,000 to get rich? Well, there's an answer. Watch the video vignettes. TaxFreeFuture.com. Check out the ebook and check out the videos.